All right. All right. Tim Moreno from Empire Home Loans.
That's me.
Tell us a little bit about yourself. How long have you been in the business?
Wow, I've been in the business for about 39 years. I
Wow.
started off doing second trust deeds and whatnot. Got into builder. I did builder for almost 23 years,
Okay.
which means builder takeout loans. I worked with a lot of nationally based builders, locally based builders, and then my career kind of skyrocketed, and I got into executive management with a couple of the banks. My last run was with Guarantee Residential Lending as an executive. That's not true. First Horizon, I
Okay.
left, and that was a good experience. And then I left them, and I wound up with D.R. Horton here in the Southland,
Okay.
and I ran Southern California Builder for them.
Nice. Nice. So in these 40 years, that's new build, retail, and everything,
Yeah,
correct?
yeah. I mean, if you look at it by and large, it was always retail, right? So
Okay.
retail lending at any front, whether I was originating or I was managing or if I was in an executive role. But around 10, 10 or 11 years ago, I had a life event. I said, I'm done.
Yeah.
So I became an originator again. And last year,
Okay.
exactly on the 9th, 1 year ago, I became a mortgage broker.
Okay. Oh, so Empire Home Loans, that's your company.
No, actually, I'm under the umbrella of
Okay.
Empire Homes. I'm an independent contractor for them.
Got got it.
If you were to look me up, you'd see TMO Lending,
Okay.
TMO, the name I've had for years. And but I mean, realistically, I use the Empire umbrella. There's a lot of lending names out there. You got this team, that team, and everything.
Got
I'm
it.
not. I'm not egocentric. My thing is my focus is on the client.
Got it. Okay.
Yeah.
Okay. Well, the reason I wanted to talk to you about this, about the 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 link loan,
Yeah.
because I had a friend of mine. Actually, he was the one that he's the loan officer that I interviewed, and he says great things about the link program. But when I met you and I mentioned it to you, you had a the opposite opinion about the
I did.
link.
Yeah.
So why is it so good for some people? And obviously, you've been in the mortgage more than anybody that I know. So you know the dark side of the link. So that's what we're going to talk about, the dark side of the link loan. Is it is
Yeah.
it is it known as the link loan or the link program?
I think it depends on the nomenclature because there's a few different banks that are repping it. And first off, I want to go on the record and basically say that I'm not looking to demonize anybody.
Right.
Um, I'm just the premise of the loan is very good, to be honest with you. I mean, as a mortgage broker, as a retail lender, it's hard to ever get your hand around I-10 because most of the retail lenders don't want the liability. But as
Okay.
a mortgage broker, you have a lot of different investors. And by and large, you're going to find that those programs are going to expand and contract from availability. But even more so, even when those programs are out and they're fluid, you're looking at anywhere from probably on the low side 10% down, but on average 20 to 30% down based on whether or not the client has a FICO score, right? But most I-10 borrowers don't. So typically, if you were to go around the marketplace, you're going to find that most lenders are offering an I-10 program at 20 to 30% down, 20 to 25% down, probably. Um, what grabbed my attention is I was working with a young lady out of the foothills, out in Rancho Cucamonga, Upland, that whole area, and she called me and she said, "Hey," she says, "I know that you've got your finger on the pulse with regards to a lot of different programs, and I found one recently that is 3.5% down FHA, and it goes off of I-10." And I'm like, holy cow. I'm not a naysayer, right? So I wasn't going to tell her, oh, you know what, that's garbage, blah blah blah. But then all of a sudden, I started seeing it on the internet. So I started making phone calls. I called some of the larger wholesalers that I deal with, and it was funny because I wasn't getting pushback, but I was kind of getting a sarcastic snarl with them going, "Oh, the 3.5% down I-10," and I'm like, yeah, what's going on? So as business goes, you're busy, you have enough time to get done what's in front of you. So kind of let go of the conversation. A couple days later, she contacts me and she says, hey, I'm really concerned about my clients. And I said, okay, what's going on? She says, well, they've applied for this loan, and I'm going to leave the bank's name out of it, but something strange has happened. And I says, what's that? They said the loan has been sold to them as 3.5% down. It's 3.5% down payment plus closing costs. I said, okay. She says, I just got a document from my clients because they don't know what to think of it. And what it was is a document that basically releases all of the buyer's interest in the deal and assigns it over to this lender.
Right.
Okay. So when it assigns it to the lender, but what it doesn't do is it doesn't assign the lender's money, it's still the borrower's money.
Right.
Okay.
So this entity holds the title, but not the loan.
The borrower. They
Yeah.
hold they I did not get to see how the loan titled out, but the way that I understood is that they have a security agreement that shows that they were the part of the origination of the loan, but everything from what I was told, and I have a copy of the document too, I just found it. It basically everything goes up under the lender's name. Okay. So the way that the transaction works is it is 3.5% down, typical closing costs. It's not like anybody was being gouged. I want to be clear about that. But what I was concerned about is that you have these borrowers, mostly the ones that I talked to about it were Latinos, and it was all their money, right? So the way that the transaction worked is once the deal closed, the borrower is in a position pretty much where they're leasing the house back from that mortgage company.
Yeah.
Okay. And it's a fixed payment. I talked to 2 or 3 people about it, and they were being told the payment's going to be anywhere from $3,200 to $3,600.
Whoa.
Which is a little bit different because when you think about it, depending on the purchase price, what's happened with interest rates last year is the new norm on a payment was pretty close to, I'm going to say anywhere from 38 to 4,200, depending on the purchase price, right?
Right.
Well, based on the purchase prices that were being represented to me, I did the math, and those payments were probably closer 38 to 4,000 or just under 4,100. So I thought that was a bit peculiar. And so in speaking to one of these people, they basically had said that they have to make payments on that for a total of 36 months for 3 years. Okay. And at that point, if they've shown a regular payment history, then essentially they have the ability to go in and get a refinance done and have the property pulled completely into their name. Lock, stock, and barrel, title, loan, everything. Okay.
Now, can they pretty much? It almost sounds like a rent to own.
It really is, to be honest with you, from what I saw. Now, I want to be clear about something. I had limited documentation in front of me, and most of which I was going off of secondhand information because at one point I had this young lady and another agent that was calling me saying, hey, we're really concerned. And, they're Latino advocates, if you will.
Right.
And realistically, in the Southland, when you get I-10, you're dealing with the Latinos, right?
Yes.
In some areas it could be Chinese. In other areas it could be Slavic.
Right.
It just depends on what the immigrant makeup for the area is, right?
Right.
And so, yeah. So, anyways, it did very much look like a lease to own. But here's the shocking part, and this is what I heard from all three people that I spoke to, is that you have to make regular payments for 3 years before you can apply for the refinance and get the property into your name on the loan and title. Okay.
Now,
Again, clear. I never saw the title. Go ahead.
are those payments supposed to be on time? Can they have the typical grace period of 5, 10 days?
I think there was a grace period. And I do remember them telling me, but I don't remember what it was. But this is the part that's going to make your skin crawl. If at any time they go beyond the grace period, the clock starts over.
Wow.
So these people could be in at 2 years and 6 months, and they have a life event, and they go beyond the grace period. That 3 year clock starts over.
That's not good.
No,
That's
no,
not
it's
good.
not. Yeah.
So let's just say, hypothetically, no life events, everything is running smoothly. They want to take ownership of that house. They've proven that they could pay for the home.
Mm-hmm.
Can they can they take over the home where they left off as far as the value, or do they have to qualify for the?
Yeah, I don't know. That's where we're getting into secondhand information. When I did document control on it, the only thing, and I'll forward you a copy of it. Of course, I'll redact the name of the institution that was repping it. But it was basically the document that said they were releasing their interest in the transaction over to the lender. As far as all of the note, the deed of trust and stuff, I want to be clear about something, especially because we're going to be out in social media with this.
Right.
Everything that I got was based on secondhand information from people that were approaching the program and trying to understand better. And it was typically either a friend or family member that was telling them, "Hey guys, there's something that's not right with this."
It's almost like, I don't know if this is the right term, but it's almost like too good to be true, right? You
Yeah.
have you have an opportunity to buy a house, but these are the requirements, and
Right.
they're very strict.
Yeah.
So besides I-10 borrowers, who else should get this loan?
If it's a lease to own program and it's being marketed like that, I would imagine anybody that's probably at sufferance with a derogatory credit history or any other factor that might limit them from purchasing a home. Because here's the good news about the program: if the program is integral, right, is that it basically locks in on a purchase price, right? My understanding is that if you buy the house, if the house is contracted for, I'm going to just make this up, 500,000, at the time you're taking it over, you're assuming the value at the time that the loan was taken. And I guess in this case, based on what I was told, after 36 months, you're getting the house at 500,000 and whatever the declining balance is. So, but see, here's the question that I've got: if the principal and interest is near enough to 4,000 and you're making a $3,400 a month payment, what's going on with the negative equity? So it's like when I met you, Rico. I think the issue is again not any assassination attempts, but I think we need to raise a no, seriously, because you just don't know what you don't know until you have a full doc set, right?
Right.
But I think we need to raise awareness in every community to ask the questions: what is this loan doing? How is it going to perform? And what is it going to do for me? So
Okay. Yeah. So let's just call it a lease to own, for lack of better
okay,
terms.
okay.
Um, what would be the difference between a lease to own program in a large scale like this versus something much smaller? Because I know a lot of people that have homes that they rent them out to their tenants, and they help them build their credit. They help them get to a point where they could buy that home.
Right. Right.
It does it. I don't see any difference other than there's a third party holding on to the title that you don't know about that can go bankrupt any day, and then here comes this other institution taking over your house. And I've heard about those ghost loans, which I'm sure you heard
Yeah.
about.
It
Could
could
this?
be any level of insolvency that could take, I don't know, it could be held in the name of a not for profit. But going back to the question with regards to lease to owns, those loans are so boutique from a standpoint of the creation. They're structured by each of the entity or persons that are providing it, right? When I
Right,
was a younger man, I rented a house, and the homeowner came to me and said, "Hey, look, you know what? I want to promote I want to promote a healthy lifestyle for you." And I was a young guy,
right,
and the guy came to me and said, "If you make on-time payments, and if after 5 years you're interested in purchasing this house, I'll do a gift of equity based on, I think he was giving me 35% of the total rents that were paid, which was huge.
right.
It was certainly enough to be able to help me get through the hoop. I'd probably
Yeah,
still have to come up with some out of pocket, but the reality is that he was, God rest his soul.
yeah,
He was a very kind man, and I had no idea why he was taking such a level of interest in me. I will tell you that he was a veteran and a retired police officer. So, the bottom line is that there could be a myriad of reasons and people that are going to do it. Corporate America has a tendency to drill it down to the benefit of the corporate
yeah,
level. I mean, that's not putting that indelible mark on any one particular company. I just think that anybody that's ever dealt with corporate America, you understand that it's usually in favor of the corporation offering, right?
yeah.
But I mean, I'm not going to say that lease to own programs are not a good thing, but the people that I spoke to, and they're going to stay anonymous.
Of course, of
Yeah, I'm
course.
not going to give that information out, but their concern was based through family and industry professionals going, what's the old saying? Nobody eats for free. If it's too good to be true, it usually
Yeah,
is.
yeah,
Yeah.
yes,
And so I don't know how it played out. I just know that they were sending me documents going, does this make sense? And the one that just made my skin crawl was that first one that said, "You're releasing your interest in this transaction over to XYZ."
yeah. So in those 3 years, they cannot refinance even though if they wanted to. Otherwise, like you said, the clock starts over.
Again, this is
Yeah,
hearsay.
yeah.
Okay, I want to be clear. This is hearsay, but from what I was told, that's what they were told. I will say this though. One of them was really frustrated because it was kind of an environment. It's like, "Hey, this is a great deal. Just sign right here." It was always in a rush. The guy never
Right.
had time to talk to them or explain anything. It's just about get the deal done. And unfortunately, there's a lot of that in the industry, and it's not just that's
Yeah.
not unique to lending. I mean, it's broad spec in any type of sales position. Unfortunately, you have some bad actors in different
Yeah.
different industries.
Well, it's the whole. I mean, even though I think everybody could relate that we bought more cars than we bought houses,
Yeah,
and and we
that's
still
true.
and we still don't read the contract. We
Yeah,
just walk in and say, hey, this is. They don't even say how much the car is going to cost. They just said, this is how much I'm willing to put down, and I want these to be my payments.
yeah,
Right.
yeah,
Then it's up to the bank to, okay, instead of doing 48 months, we're going to do 82 or whatever.
yeah.
Because
Well, the other side of that you have to be careful about, especially when it comes to car notes, is that you have the younger clientele that is just so laser focused on getting the car of their dreams. They're much more concerned about being approved than they are about the terms they're getting.
that's
I
true.
saw a deal from a guy, and he was asking me if this made sense, and I looked at the contract, and the car he was going to buy was like, I think it was like 40 grand,
Wow.
and but the note after everything was almost 49,000. I'm like, what the heck is this? So when I went into the details, the car he was trading in had negative equity, and they were tacking it onto the contract.
Yeah.
And then I didn't even realize that. But he had the wherewithal to stop and say, "Hey, does this make sense?" And he stopped the deal. So
Yeah.
now that doesn't happen in real estate. I mean,
No, 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 it doesn't. However, going back to the link loan, it's a 40-year, not 30-year, correct?
You know what? From what I understood, it was 30. I don't have any intel on what you're calling, and that's why I say I think it's
Yeah.
nomenclature as far as the link loan. I really don't know about that. The program that I heard was being offered by a specific entity, and again, I'm going to leave them off because I don't want to get into any liable issues.
Yeah.
Uh, but the bottom line is that the structure of the program, whether it's a 30-year amortization or 30-year um,
Yeah, because
it
I went online, and this is what I
mhm,
found. Sorry to interrupt you. I don't know if you could see it. I don't know. Yeah, this is a website. It's called My Link Loan. So I don't know
mhm.
who this is, but it says here. It says here. Right here. The Link home loan programs include a
A 40-year
40-year amortization loan. Okay, so we know what that is, right? Instead of 30 is 40 years.
Yeah,
But
but you know what? Let me stop you right there. Is that when you're talking about a bridge loan, that's typically not tied to this type of financing. I think what you're having here is if you look at the tail end of that, it says all link home loans are backed by assumable 30-year FHA own option mortgages. You see, a bridge loan, there's a couple of different ways to look at a bridge loan, right? So a bridge loan is, let's say Rico comes to me and says, I have a house that's worth 750,000. I found the house of my dreams. I'm going to sell it, but I don't have time. I got to get enough money to make a down payment and closing costs and close on the first house. A bridge loan typically will allow you to get 75% of your equity on your sale escrow, the house you're living in. You take that money, go put it into the new home. And one of the nuances about most bridge loans is that they don't count it in your debt to income ratio or DTI. So that's a different program. So I think that what's going on as far as Link might, and I don't know who these people are,
yeah,
Link
no,
might have a stable of different loan programs that they're talking about.
yeah,
The only one that I've been exposed to was the I-10 one.
yeah, which is the I-10 are the people that are getting into these link loans.
Yeah, yeah.
So
And
obviously,
here's the thing, Rico, you may have families in there that are happy cats. They may be coming up on the 3-year term and they're going to refinance and maybe it'll all be okay. But there's just a lot of questions that need to be asked.
yeah, yeah. Well, whenever it never fails. Every time I do a home inspection, the question that always comes up about 8 out of 10, would you buy this house?
Yeah.
And I'll ask you the same question. Would you let your loved one get a link loan?
Um, it would depend on the circumstances. I mean, I
Yeah,
think my gut check is no, but I think that I would have to, at that point, there's no hearsay. I'd be
right.
on the table with them and the originator asking the questions. And I think that's the issue that I'm trying to drive here.
Right.
Nobody's saying that anybody's doing anything illegal. Nobody's saying that there's
No,
fraud involved.
it's perfectly no. The link loan is everything is legit because I've done a lot
Yeah,
of research. Everything is legit.
yeah,
However, it's for a very unique situation, a very
it
unique
is.
person, a
Yeah,
very unique um, individual. That um, it's almost like a like what we talk. You can name it anything you want. You could call it the link loan, of course. That's the name of it. You could call it the lease to own. You could call it the second chance loan.
Yeah.
You could call it.
You want it. Yeah.
You could call it anything you want. It's almost like it's almost like a shark loan.
You know, here's the thing is, and I've raised my kids on the premise of, and I'm blessed in the fact that they utilize the same verbatim, and that is, and I tell my clients this as well. Um, ask me anything you want to know, but be careful. I'm going to tell you the truth.
Yeah.
Okay. So the reality is that I think, again, there's no assassination attempts here with regards to the loan
No, of
program.
course not.
There's no jiltedness because they're getting the loans and we're not. We don't do that loan, right? But
Yeah.
the issue is I guess what I'm saying to John Coop Public, who's going to be watching this video, ask questions. Find out what the term is as far as the 36 months, right?
Yeah.
Ask about the reset, ask about the delinquency. What are the grace periods, right? So if it's due on the 1st, is it considered late on the 15th like it is? I'm sorry, on the 16th of the month like it is on a normal loan? What happens when I go to refinance this? If the house was contracted at 500, am I getting it from you at 500,000? These are indexed questions that have to be asked, and that's why when you asked me about doing this video, that's what I wanted to bring to light.
Yeah, yeah, totally. It's obviously it's your professional opinion about being in the business for 40 years. I think this is good information. There's going to be a lot of questions that probably I didn't ask, um, but a lot of people are going to take this loan is going to help a lot of people, and this loan can also put a lot of person in a situation that they don't belong. Not that the loan is bad, but because they're given a second chance to own a home, and
Yeah.
because of their lifestyle, their habits, they're just gonna default out of default.
Well,
And
Rico, I'm going to put it this way. Okay, if I sit down with you and I break it all down for you, A through Z, one through 35, all the increments are covered. You make the decision to to eh, to pull the trigger and utilize that program. That's on you,
right,
right? But
yeah,
if it's a situation where there's any, I don't want to use the word deceptive tactics, but if there's anything that is left from a standpoint of non-disclosure, that's what we do. We're licensed professionals. It's up to us to bring all the details to the table so that you, the consumer, can make an informed decision, right?
yes,
If there's something that we know about the program, you know, for God's sakes, let it be because you were distracted that you didn't share that rather than you saying, no, I don't want you to know about that. You
yeah.
know what I'm saying?
Well, deceptive practices happen all the time, even in a paper. It's gonna happen.
It's
Uh,
true.
I could see this having higher deceptive practices because of the type of clientele that they're going to target, that who's going to apply. Not that they're naive about it, but
Yeah.
it's really, the bottom of the food chain type of person. And I don't mean that in a derogatory, but it's if you are not in that situation, you wouldn't be getting this loan. Does that make sense?
Yeah, it is true, but I can't ascribe to an opinion as to whether or not it's deceptive or not, because
Right,
again, everything I've got has been based on hearsay. You see what
right,
I'm saying? And
yes,
and based on the conversation that you and I had before Christmas, is that the conversation popped up about the program, and I'm like, there's a lot of questions that need to be asked about this thing.
right,
And and I think if anything that your video does here when you post this is that you as the author, you're raising the awareness in the
right.
community, whatever underserved community it is that needs that help. I think that we have to be careful as professionals is not to be pointing fingers.
No, of course
We
not.
have
No, no.
yeah, yeah, yeah. We have, and I'm not assuming that you're saying that. What I
Yeah.
am saying is that I think what we need to do is raise the bar from a standpoint of lucidity, clarity, transparency. We have to be clear. It's
Right.
like if you called me for if you called me for an interest rate check, I'm going to tell you without your credit report and without issuing an APR that rates are going to be from here to here.
Right.
It's not until I have an application on you and I've looked at your credit and I'm in a position where I can issue an APR that I can say this will be your rate. That is what I'm required to do by the federal government.
Right.
And I'm just putting it out there to make certain that the consumer knows that the CFPB, the NMLS, they have standards and practices and performance requirements on people such as myself in this industry to ensure that they're protected. That's the number one focus of every originator. And I know, guys, everybody's going to go, okay, Timmy's a Boy Scout. He's just waving his flag. No, but it's the truth. Because
Yeah.
here's the thing. Let me ask you a question. If you sent me your son,
Right.
and your son got injured, you found out that because it was not half truths, but it was just half information because I was so busy I didn't do my job, and your son got hurt financially. Couldn't be proven that I did anything to cause harm to him, but if he was impacted financially, you'd be upset with me.
Yes.
That's our standard. That's how we have to produce. That's the requirement of what we do as professionals in this industry, is to treat people like our family.
Yeah, absolutely.
It's basic and simple,
Yeah.
When you go on an inspection, you said it yourself. Would you buy that house? That's the question.
Yeah. Well, the thing about it is that there's a lot of houses I wouldn't buy,
Yeah.
and there's a lot of houses that I would buy.
Yeah.
And you'd be surprised.
But based on a set of known principles, right?
Yeah, exactly.
So you bought that house and it was on the market for 500, but you're looking at it going, man, there's about $135,000 worth of damage here. You might go in and make an offer way below 500, and if you bought it, you knew.
Yes.
Right?
Yes.
And I'm going to say an old statement that people remember mostly because of the Brady Bunch, but caveat emptor, let the buyer beware.
Yeah.
Right.
No, absolutely.
Buyers should beware based on disclosure, full disclosure. That's the key. That's the key that I think you and I are trying to drive here. It's all about disclosure.
Yeah, it's all about disclosure, and it's all about awareness.
Yeah.
Okay, because I love doing these type of interviews because I like I want to use the right word, but I'm an instigator. I like to, okay, you say this, but what do you say? And what do you say? And what do you say? Does that make sense? It's good to have multiple opinions.
Yeah.
Okay.
It's true. It's true.
So
I mean, it's the same as somebody saying they've been in the business for this long, right? If you look me up on national licensing on the NMLS, you'll see that I've been licensed since 2011. But prior to that, it wasn't required that I had a license, right?
Yeah.
So you're going to gauge what it is that you're being told by the honesty of the provider, right? So my statement is that I've been in the business since the mid 80s, right?
Right. Yeah.
At one capacity or another. So if somebody were to go pull my license and look at my license, going, that guy's full of poop. He's been in the business since 2011. Right?
Yes.
But here I am saying, nope, I've been in the business since the 80s, right?
Right. Yeah.
By the way, I was 7 years old when I started. So
7. That's awesome. Hey, Ted.
This was too much sun.
those are too many link loans.
Yeah, that's what it was. Yeah.
So Tim, what the information that you got in this link loan, it's all hearsay, like you said. And
for me, it is.
Yes,
for me,
it is.
I didn't even realize that there was a website. I never went that far.
No worries. I just Googled it. So what you have, what you know about this,
Mhm.
okay, in your professional opinion, what would be like the top 3 to 5 questions a person should ask about this loan if that ever gets presented to them?
Beautiful, beautiful segue. Because number one, the document that says that I am releasing, or I don't know if it says releasing or relinquishing. I think it might say assigns the information on the contract over to this whoever the person is, their corporation or entity is. Okay. Number one, why? If I'm buying this house and this is my money, why am I doing that?
Okay.
Okay. Number two, um, you're going to want to make certain that if they're saying that the loan is federally insured, that it actually is. They can pick up the phone and call the home ownership center in Santa Ana. Okay, it's called the HOC, Home Ownership Center, Santa Ana. They have. I'm not certain if there's a phone number for the industry and a phone number for the consumer, but either way, ladies and gentlemen, let me tell you, you can get in touch with them so you can ask the question about that.
Okay.
Okay.
Yeah.
The next part is and I'm probably going out of order here, but if I am subject to a refinance, what is the value of the home at the time that I refinance? Are they going to be gaining equity and me and I'm not, or is it going to transfer over to me at the price that I originally paid for it? Okay.
Mm.
Is there maybe some carry cost inside of that? And if it is and it's legal, that's okay. Full disclosure.
As long as
Okay.
they're aware and they're okay with it.
Yeah, that's right.
Yeah.
I mean, if I buy a house for 500,000 and in 3 years it's 550, and the company wants that 50 grand, I got to look at it and say, okay, well, what did it cost to enter? It cost me 50 grand. But you should be able to ask that question up front. Okay, is the transference through whether it's an assignment or it's a refinance or whatever, is that assignment going to be at market value, or is it going to be at the price that it was agreed on at the time? Okay, so that would be another question. The other question is the payment amount, right? So again, hearsay. So I'm just going to use an example. All right. The issue is that if the payment is going to be $3,450 to Rico, but you do the math and find out the loan is got a principal and interest, taxes, and insurance payment of, let's say, 4 grand. What happens to that delta between what you're paying and what is supposed to be paid? Okay, they may come back and say that's part of the 50 grand market value home that we're going to sell back to you. If that's the situation, you're okay with it, then no harm, no
Let's move
foul.
on. Let's go.
Yeah, but disclose it to me. Tell me what
Right.
goes on between the payment I'm making and the payment that's required. There's a big difference. Okay. The next question I would ask is, how is this note going to be stored? Because you brought up a very, very, very salient point. Not that I didn't think about it, but there's so many other things that we're talking about. And that is, who's holding it? Can they become insolvent, and can I lose the house?
Right.
Because if they did something wrong, or if they're upside down, you have a right to know what is the condition and the health of that note. Because you could be making that $3,450 a month payment, if they're reading the LA Times that XYZ company just went under. You're going, whoa, wait a minute. And really, what are you going to prove?
Nothing.
You're you know what I'm saying?
Yeah, there's really nothing to prove. But how? Yeah, that's a
I'm certain
legitimate
there's a
concern.
document that says what is their rights and interests in there, and there may be a feathered line on the deed of trust, or on. I'm not going to say. I don't know if it's on the note or the deed of trust, or even like a rider that basically says that Rico basically has X amount of interest in this home. But probably the biggest question of all is that timeline of payment. That was the thing that raised the hair on the back of my neck. And yeah,
Yeah.
there's hair back there. There's none up here, but it's back there. Is that if it's a 36 month gestation period, Okay, number one, what are the grace periods? First to the 16th, like a mortgage, or first to the 15th, actually, on the
Right.
16th, you're late. But what's the impairment? So if I make the payment on the 15th, I'm fine. You can do that with your mortgage company. I don't suggest you do it, but if
Right.
your pay cycles are as such that you need a little bit of grace time, ladies and gentlemen, if you make your payment on the 15th, you're fine, but the check better clear on the 15th.
Got
If
it.
it rolls into the 16th, they're not going to mark you late on the bureaus, but you're going to get hit with whatever your late fee will be. But
Right.
what is the impairment at that time, Rico? So does it truly restart the clock, and then you're back into that cycle of payment for another 3 years? And here's another question this old ball head just came up with. Okay, so let's say it sells at market value. So after 3 years, let's say that the realized equity is 30 grand that you've agreed you're not going to take a part of. But if you got to go for another three, think about think about that. These are questions, ladies and gentlemen. This is stuff that you got to ask. When
That's an
somebody
excellent
comes,
point.
yeah, when somebody comes to me and says, "Well, I've got a 5% down, no mortgage insurance," go get it.
Yeah.
I don't have it. Go get it, but ask the questions about it. The fact that you're not going to have any mortgage insurance with 5% down, it's probably a credit union. But if it's not a credit union, it's probably in the interest rate. So if
Yeah.
the market rate is 7 3/8 and you're paying 7.875, eh, it doesn't take a genius to figure out that the interest rate paid for the mortgage insurance. You see what
Yeah.
I'm saying?
Hmm.
If the market is buying notes here, I can't do this right? And
Not
you're
yet.
selling your note here, that delta is a margin that's equitable, right?
Mm.
So if you have value at a higher interest rate in the note, then that's how the industry does lender paid mortgage insurance. There's all kinds of different things involved with that. So or a borrower paid mortgage insurance just means that the borrower is going to pay it. But if it's lender paid, then the differential is going to be somewhere inside of the interest rate, or it was built into the value of the interest rate before it was even released to the curve. So,
Mm.
anyways, a little lesson there in secondary marketing.
No, no, secondary marketing. No, that's good. That's very good information. Those are good questions to ask
Yeah,
because a lot of people they don't they just they they want to ask, they just don't know what to ask.
yeah. I'm going to tell you something, and if I'm honking my own horn, then so be it.
Then toot toot.
The best compliment I ever got was from an older chap that gave me a rating, and stinking Zillow, I guess it expired. I loved it, and I don't have a copy of it. But he basically said the thing that I enjoyed the most about Tim is that if I asked a question he couldn't answer, he said, "Sir, I don't know, but I will get the answer and call you back."
Right.
That is a standard, and that wasn't mine. God rest his soul. That was a guy named Don that was my mentor in this business. And Terry
Okay.
Cooper, if you happen to see this, I love that man and I miss him greatly. But that was the stuff that he instilled inside of me. Now, that doesn't make me better than anybody else. There's a lot of people that practice that same premise. But it's important for us to understand that, here's the thing, Rico. I'm not a transactional guy. I'm a
Relationship.
relationship guy. I want to be your mortgage guy for life. I want to be your children's mortgage guy. I want to be
Yeah.
your neighbor's mortgage guy. How am I going to do that? I'm going
Yeah.
to tell the truth, and I'm going to do the best job that I can do for you.
Yeah.
You know what I'm saying? You got to answer all the questions.
Oh, absolutely. Absolutely. No, this is great information, Tim. Thank you for finding the time
Yeah.
to do this because I want to give as much as information to everybody that's out there that's looking into getting loans, and if this is an option that's going to work for them, and like you said, disclosure, and if they're okay with the terms, then hey, sign here.
Yeah.
Yeah,
Yeah. Nobody's saying it's illegal. Nobody's saying it's fraud. Nobody's saying that it's a bad loan. What we are doing, ladies and gentlemen, between Rico and I, are
Yeah,
trying to get you to raise your awareness, ask the
yeah,
question. You know,
absolutely.
and the one thing that you do have to ask though, and I'm not going to say be careful, but if every lender that you talk to is saying the same thing, and then you got one guy that's saying something different,
Yeah, totally, totally.
so
So Tim, how can they get a hold of you?
they can
Where's
call me, they can email me. My email is tim@empirehomeloans.com.
uh-huh.
My phone number is 951-897-5457. And
Yeah,
like I said, you know, my maxim is go with experience and put my experience to work for you.
yeah. I'm gonna put all the information down at the description below, and that way they can find you there. And yeah, and hopefully somebody will call you with some more questions that we didn't answer here.
Yeah.
Yeah.
If anything, it's like I tell people, okay, if you're not going to use me, I tell you what, the guy beat my rate. Let me help you keep him honest.
I do. I do the same with my inspections. It's funny you
Yeah.
mentioned that. Whenever somebody goes with somebody else, because for no a number of reasons, it could be
Yeah.
price, it could be availability, it could be the distance, it could be anything. I'm like, once you get that report and you need a second opinion, you
Yeah.
give me a call. But make sure you ask them this
Yeah.
for all your inspections. And just like what you said, is to keep them honest.
Well, it's true. Back in the day, before we went to loan estimate, it used to be the good faith estimate and whatnot. And there was just, and this is pre 2008, they used to have these goofy dudes that weren't charging any points, but they had a broker admin fee of $2,000. And by
Yeah,
the way, it's an APR sensitive. It's just
yeah.
hiding right on it for you.
Yeah, exactly. Exactly. Well,
Rico,
Tim,
you're
thank you.
awesome. Thank you for inviting me in this, and I hope to reciprocate one day.
No, I appreciate it. Thank you very much. And if I come across something that I we need to do another video, then I'm definitely gonna reach out to you.
I appreciate that, brother. Thank you so much. God
All
bless you.
right. Thank you. God bless.